Hey everyone, wherever you are, hope you're having a wonderful week so far. Here with the latest episode of the Inside Crypto Show, interviews and discussions with the regular people just like yourselves. We're here with April's guest. I'm so glad Matthew Lamel could make time for us. He's the managing partner and CEO of Blockchain Co-Investors, launched in 2014. Blockchain Co-Investors' vision is that digital monies, commodities, and assets are inevitable, and all of the world's financial infrastructure must be upgraded. I think all of us can agree with that sentiment. But before we get into lots of interesting topics and stories today, Matthew, do you want to tell us a little bit about yourself and maybe the story of Blockchain Co-Investors?
Thanks for asking, and it's great to be here. I'm looking forward to sharing whatever we know, and I know you're going to have lots of great questions for me. Blockchain Co-Investors is our firm. We've been investing in blockchain for about 10 years, but we were internet and fintech investors before that for a total of maybe 25 years. In blockchain, we have three strategies. We are a fund of funds, which means that we're partnered with the leading blockchain venture firms around the world, and very happy to be an investor in maybe 45 blockchain VC funds. And then we also do direct investing, both token investing and also follow-on mid-stage investing. But everything we do is venture. So we're looking for great teams, building on top of distributed ledger technology to create great projects and great blockchain products and services. We're not traders, so we do not do trading. So even though I know you're going to ask me questions that are more trader oriented, I just want the audience to know that's where I'm less qualified.
No problem. And I fully understand it. It's interesting you mentioned great teams. I was listening to a podcast last week or so, or 2 weeks ago, and they were talking about like venture capital or investing in crypto projects has dried up with good reason in the 2022-2023 season. And is this a reason just the teams are not great? Like you mentioned great teams, like what's a great team for you?
Yes. So Kriyan, let me just correct that perspective. Averages lie. And when people track venture, what they tend to do is they'll track total investment or total capital raised in venture. The problem with doing that is the capital is driven by late stage venture. And so here in America, I'm based in Silicon Valley, have been for 40 years. In America, to keep the numbers round, maybe $100 billion a year gets invested in venture, but only less than 10 billion is early stage. In fact, it's between 5 and 10 billion. And the vast majority of that 100 billion is late stage. What dried up in 2021 and 2022 was late stage venture capital, which drives the numbers. But early stage venture capital did not dry up. The funds that we back, which are the blockchain capitals and the One Confirmations, the Castle Islands, the Future Perfects, they didn't stop investing. They were always investing through this cycle in blockchain teams and projects, both equities and tokens. That did not stop. And then going to your second question, which is what's a great team? Everything we're talking about is about software development. It's about building new software, including with new capabilities. Distributed ledger is a new type of database. Protocols are establishing new rules and approaches to computing or storage or security. And so great teams have to be first and foremost people that understand these new technologies and innovations. Many of them are builders in the sense they can actually write code and they can actually figure out how to make real software work. And that's what they're going to bring to market over time. And lots of these are also open source initiatives. So they've got to understand what they're trying to build. They've got to know how to build it, but they've also got to know how to operate it in more of a network or community-based way, including incentivizing other people to get involved and to build these projects as well. So these are some examples. It's not like we're issuing a meme coin and all you need to do is find a good image, create a little bit of a narrative and append it to a token and send it out there. What we're backing is heavy duty software development.
Okay, and that makes total sense. You mentioned meme coins. I have to ask, I know there's like a mixed opinion when it comes to social media. he's like, oh, meme coins are essential to the narrative and the fun of crypto. And the other side of it being, oh, meme coins are a distraction, or they're the reason that we had the bear market before. They've caused lots of people to lose money because they're like, okay, I'm gonna get 100x on dogwood hat or bunk or something like that. What's your take on meme coins?
Yes, thanks for asking, Kriyan. And here I'm probably going to be unpopular with a lot of people. I'm a fundamentalist around the notion that technology and software and innovation are changing the world in very positive ways, but they, at the end of the day, have to deliver value. They have to deliver products and services and offerings that the world needs and the world wants, and that help people live better, more productive, more happy lives. So for me, that's what we're trying to back. Blockchain and Satoshi Nakamoto and the Bitcoin white paper started out with a goal, and that goal was to provide access and seamless, real-time, low-cost, reliable ways to move value globally. And Bitcoin does that, and software engineers built that. And that was very valuable, and it's just one of many things that we can use distributed ledger technology for. So when I see an initiative where I can't understand any tangible output, I do not want to really get too involved in that. Now, value is in the eye of the beholder. So I do appreciate that if something makes you happy, if you find something funny, if you appreciate something like fine art, the art that's on the wall behind me in this hotel room, then it has value for you. And that I should not be negative about that. I may not see the value. There may not be any discounted cash flow associated with this image. But if you want to buy it and you're willing to pay $1,000, $10,000, $1 million for it, that's up to you. And so with meme coins, if a community is finding them fun, if they're enjoying them, if they like them, I'm not going to say they shouldn't be buying and holding them. But if the only reason they're buying them is because they think the price will go up, and if there is no value being generated by the team or the project, then I feel like there's a nosebleed waiting to happen. And Kriyan, just to be clear, we had the ICO boom and bust, where the vast majority of ICOs were teams of people who never planned to build any software. They did not plan to write the white paper. They just wanted to take the money from the ICO. Then we had the NFT boom and bust, where most of the NFTs weren't even scarce. And a lot of people bought them believing that they were and that they'd go up in value. And of course, they haven't. And now I'm very worried that we're going to have the meme coin boom and bust. And I guess it's a long answer, Kriyan, but at the end of the day, if someone is issuing something in order to make a lot of money, but in order to make a lot of money, they have to make a lot of other people lose a lot of money, then I don't think I want to be involved. If someone's building something that is going to create a lot of value for a lot of people, and the entrepreneurs are going to make a lot of money, then let's talk about that, because that has a net positive to millions of people's lives, and it's worth getting involved in. So that's my general view. I'm very afraid that the meme coins are going to create another boom and bust cycle. And I think if we destroy the wealth of tens of millions or hundreds of millions of people who do not have money they can afford to lose again, then our industry will be much the worse for it. And in fact, I would expect the regulators to be very aggressive in trying to close us down and slow us down. So it's a fear that I have.
Very well said, Matthew. Honestly, that last few minutes was amazing to listen to. Let's move on to something a little bit more positive. You're in Hong Kong, right, for their Web3 Summit. What's the feeling there? You're just across the ocean from me, which is wonderful. I rarely get guests this side of the world, so it's nice. And I have not been to Hong Kong in forever. China and Hong Kong have had a mixed history when it comes to crypto in the last 2-3 years. You were there, you're on the ground. Like, how do you feel talking to people?
Yeah, thanks, Kriyan. Firstly, you should pop over to Hong Kong, and you should probably pop over to Singapore, given what you do and what your interests are, because you will be very happy and motivated and excited if you do, because there's no question it's a very optimistic outlook right now. There are some very specific reasons for this. I was at Web3 Festival. That's hosted by Hashkey, where I'm on their advisory board for Hashkey Capital. And they're one of the leading blockchain investment firms, along with others that we're also investors in, like Dragonfly and Summer Everest and Spartan and so on. But in the specific case of the Web3 Festival, they'd invited and had registered tens of thousands of people. It was in the big convention center, and they had a who's who of speakers. On the first day alone, we heard from, or at least I spoke with or heard from, China PRC government officials, Hong Kong, China government officials, and then CEOs and leaders of the blockchain space. I would summarize it like this, not to take their words trivially, but I would summarize it this way. China has always been, and certainly for the last 8 or 9 years, has had the view that distributed ledger technology is part of the Chinese industrial plan and is very important in China. And there's no question about that. They've never wavered from that. They believe that blockchain and distributed ledger technology is very valuable in the Chinese mainland context. But they weren't sure about crypto and some of the things crypto enabled, which included, people moving money offshore or hiding money from and not paying tax and other things. So China was pro blockchain, pro distributed ledger technology, but anti-crypto. Hong Kong is a global financial center, and it knows that it's got to be a global digital financial center because the world of finance is digital. And if Hong Kong isn't a global financial center, that's more than half of its raison d'etre that goes out the window. And what just changed is that now the Hong Kong, China officials, the CFC, the Securities Commission and so on, they are now beginning to say, and they're moving very fast, to draft and pass pro-innovation, pro-digital finance, and pro-crypto rules and regulations, laws within which our industry and entrepreneurs can operate. They're moving very fast to catch up and to pass other financial centers around the world. My assumption, though no one actually said this, my assumption is that China PRC must have given their blessing for Hong Kong, China to say the things they're saying. And I view that as very positive, because that means that there is a willingness in China PRC to explore all of the things that our industry and we are trying to do around more access, more speed, more fairness and equality in finance and commerce globally. And then at the level of the entrepreneurs and the investors, they're back. So there were so many great teams that flew in or that are based here in Hong Kong and in the region, Shenzhen, obviously, just across the way. And they were excited. They were talking about their projects. Some of them are getting a lot of traction and adoption. And the use cases are coming fast, which I know we can talk about in a minute. And then from an investor perspective, the investors are back too. And whilst everyone's talking about Bitcoin, which we'll talk about in a minute, they're also talking about venture investing. They want to be involved in the next wave of innovation, the next wave of projects, and they're willing to put their capital in. And so it's an alignment. It's a very exciting moment again. And the last 2 years were not exciting. The last 2 years, we lived in a world of pain created by bad behavior in 2020 and 2021.
Thank you for that description, Matthew. There's a lot more I'd like to talk about, but I want to be conscious of time and especially your time. So I want to talk more about what you do, what Coinvestors does. And I know you recently revealed a report, the world's top 50 financial institutions are rapidly embracing digital finance. I was wondering, maybe you could give our audience a highlight of this, like you mentioned this, right? And who are the people who are actually doing this? Because we still do see, despite all the inflows and Bitcoin ETFs in the US and being able to participate in them via eToro, even if you're not in the US, what's the feeling? Because I feel like still talking to people here in Taiwan, or I'm originally from South Africa, talking to people back in South Africa, interesting, but still I don't see how it impacts me as the average person.
My first career, I was a strategy consultant at firms like McKinsey and Carney and Booz and Monitor. And these are fact-based, analytically oriented firms. So we don't begin with sentiment or feelings or what people are talking about in the press. We look at the facts, what's actually happening. And as a venture investor, it's a little bit more qualitative, because if you're early stage, you're having to meet with entrepreneurs and talk with them and hear about their visions and their beliefs and their plans. And a lot of that is not fact-based, but you still do a lot of fact-based analytics in your due diligence process to try and figure out, is there and is this idea, this white paper, this business plan, is it going to fly? In the world of blockchain, there are a lot of facts, but what the press talks about tends to be fact-free, or far too much fact-free. And there's also a lot of disinformation. There's a lot of disinformation because a lot of people don't want to be disrupted. So, going back to the internet years, entire industries, the music industry, the Hollywood content industry, the book industry, the retailing industry, and I could keep on going. They got fundamentally disrupted by a wave of digital internet-based companies. And now we're unleashing digital finance and value. And so there's entire industries like banking and asset management and insurance and so on that are going to get fundamentally disrupted. And so, Kriyan, what do? We invest. How do we invest? Based upon the best practices of venture investing. They haven't changed. There are a couple of new ones because of what blockchain and tokenization do, but mostly it's the normal best practices of venture investing. We do some reports as well because we want to be fact-based. And so on our website, blockchaincoinvestors.com, anyone can download our biannual reports. We do 3 of them. One is Meet the Blockchain Unicorns, where we actually tell you how many blockchain unicorns are there, what are their names, where are they located, which ones are equities and which ones are tokens. And we do that because that's a lead indicator of value creation. If you've got very valuable companies and projects, that means value was created in the space. The second is, we call it the Regulatory Compliance Tracker, and we're looking at the top 25 financial centers in the world. That's New York, London, Tokyo, Zurich, Hong Kong, Singapore, etc. And we're tracking the degree to which they've already passed pro-innovation, pro-digital finance, and pro-crypto legislation. Have they passed market structure bills? Have they passed the stablecoin bill? Have they passed a digital asset framework, etc.? And then the third one, which is the one I'm now getting to, Kriyan, is we also track institutional adoption. And this is TradFi. So this is for the 50 largest asset managers and institutions in the world. In other words, the biggest TradFi companies in the world, the biggest banks and the biggest asset managers in the world. Have they actually deployed products and services in our space, which means digital custody, digital wallets, digital monies or stable coins, digital commodities like Bitcoin, digital assets? And the reason we ask that question is because they may be saying, we don't need this, we don't want, this is all garbage. But don't listen to what they say because they're strategic. So a good strategist will tell you one thing and do another thing because they don't want you to know what they're doing, right? They don't want their competitors to know what they're doing. So you look at what they're doing, not what they're saying. And so our institutional adoption report is focused on that topic. And by the way, Topher Nelson couldn't be with us today, but he's our head of digital asset research, and he actually does all 3 of those reports.
Wonderful. I know I looked at the adoption report, and very detailed, very interesting. Even for, well, I do have some knowledge, I still consider myself an average typical crypto user, and those reports are extremely helpful.
Yes, I'm assuming that the audience wants to know what are the key so whats. And the key so what is that global institutional adoption is tracking much faster than you would think. If you read the press, you would think blockchain and crypto is people that have created things like Bitcoin and Ethereum, and they're building DeFi and NFT platforms and other things. And you would believe, if you read the press, that the big asset managers don't need it and aren't involved. They are. Of the top 50, 52% of them, that's more than half, have a digital wallet or some digital custody or digital trading offering already in place. That includes every Chinese large bank, because they needed their digital wallet support to support ECNY, which the digital yuan, and so on. 42% of them can already offer you and handle digital monies, which includes CBDCs like ECNY that I just mentioned, but it also includes stable coins, for example, a Tether or a Circle. And about a third of them are also beginning to get involved in digital assets or digital commodities, which includes the Bitcoin ETF. So the BlackRocks and the Fidelities of the world have already launched their Bitcoin spot ETFs. But there's a whole world of other people, including people with names like Goldman Sachs and Citibank and JP Morgan, who may be saying they're very anti the space, but in practice, they're very actively involved underneath the surface of the BlackRock IBITS or ETF. So again, they may be saying, I'm JP Morgan and we don't really need any of this. But the truth is JP Morgan or Goldman Sachs or Citibank is actually building a business right now that's built on top of distributed ledger technology or Bitcoin and blockchain and other things. If you have a moment, you can download it for free on the homepage of our website. And certainly if you're out there talking to your friends and your friends are saying, this isn't real, there's no use cases, the world of finance and commerce doesn't need blockchain. This is evidence. This is fact-based evidence that argues the opposite side.
I'll include those links down in the YouTube video for today's podcast. And I definitely highly encourage people to read it, because I think crypto reports are interesting. There's like a very big difference. Some are like master's degrees theses, and this is very well written and easy to understand. So I definitely encourage people to read it. Matthew, you mentioned your regulatory tracker, right? And you're in Hong Kong, and we know Hong Kong, the big social media this week is, yes, Bitcoin spot ETFs next week, which is fantastic, right? But correct me if I'm wrong. I might have lived in Taiwan too long, but you might be originally from the UK, I would assume.
Yes.
So what's your take on the UK? Because while England has left the EU, right, lots of people still think of the UK as being Europe's financial center. And what's your take on their thoughts about crypto and regulation? Because we know the Prime Minister of England at the moment, Rishi Sunak, has been like, yes, we want to get this done, but we're still not sure if it is going to happen or when it's going to happen, that sort of stuff. Do you think the UK moving forward with crypto regulation is going to change the current sort of state of London and the UK?
No. It's been a while since any one financial center could say we're the only financial center that matters, even in the context of a single country. Countries have become very commingled in terms of global finance and everything that goes with that. And the leading global financial centers work very closely together. So they may have local laws and they may have different requirements by jurisdiction, but they are extremely interconnected. And so what goes on in Washington matters for the euro-dollar market in Europe, as an example. They're very connected. So the global financial centers, we know their names. There are several of them. We certainly think there's more than 25 of them that really matter. And I mentioned some of the names tend to begin with New York at the top, but in some areas it's London at the top. In a few areas it could be a Shanghai or a Beijing or a Tokyo or a Singapore or Hong Kong that really matter. So they are global. In the Middle East, it's Abu Dhabi and Dubai in particular. But in Europe itself, Switzerland and Zurich are exceptionally important. And let's not forget Paris, and let's not forget, and so on. So how are they all doing? And the answer is they're all beginning to pass pro-innovation draft regulation to enable digital finance and to ensure that they continue to compete as global financial centers. So that's happening. And it's even happening in America, which is the laggard this time around. In the internet days, America was the leader in passing pro-innovation regulation. Now, with the digitalization of finance, we're the laggard in America, and other places have moved faster. Now coming to the UK specifically, again, look at what they're doing In this particular case, there's an alignment between what they're saying and what they're doing. So you are correct. So the Prime Minister of the UK, the Cabinet Office, the heads of the various regulatory bodies, they're all saying that the UK will be a digital finance center, and that digital finance is important not just for DeFi, but also for TradFi, traditional finance. And there's an expectation that the biggest banks, of which there's 4 or 5 in the UK, and the biggest exchanges, of which there's obviously a very big one in the UK, and the biggest asset managers, of which there are several in the UK, they will all have to embrace these new technologies. And some of them are already doing that. Some of that are waiting on the sidelines, waiting and watching. But the regulatory framework is being created. And in the UK, that means they have drafted or already passed some rules and regulations around market structure, which means basically what are the different components of this new world and who's responsible and who can participate and what regulations will we eventually need and so on. And then they've been very specific at passing some, or at least creating some drafts, and in some cases passing regulations around things like stable coins or digital assets. So the UK is actually a leader in this regard. For our industry, there are different points of view on this. Some people think that it's better not to have any regulation. It's better to have a gray zone, because then they think you can do things more easily and in a less constrained, lower cost way. We don't believe that. At Blockchain Co-Investors, we think finance does require regulation. And if we're talking about the digitalization of the movement, storage, and use of value globally, we're going to end up having to have regulations. And we don't think regulations are a bad thing at all. We think it does make life tougher. Regulated industries are tougher to operate in than unregulated industries. And so it does make life more difficult for a blockchain entrepreneur. If you're a blockchain entrepreneur and you want to be compliant and operate within the laws of societies and countries, there's more work. There's more work. You're going to have to do more things. You're going to have to, whatever those things are, you're going to have to do high quality KYC, AML. You're going to have whitelists. You're going to have to blacklist certain people or countries. It's a lot more work. But we think on the whole, it would be naive to think that we're going to digitalize value globally with no laws and no regulations. So we're actually pro-regulation. And we think that blockchain entrepreneurs are going to have to be able to operate in those parameters. And the issue has been they haven't been coming fast enough. So thank you, the UK, for being out ahead. Thank you, Switzerland. Thank you, Abu Dhabi and Dubai. Thank you, EU. And thank you, Hong Kong and Singapore. And all of this will make it increasingly likely that America will catch up and pass the same types of pro-innovation regulation before too long.
I love that sentiment, and definitely fingers crossed for me, even though I don't live in the US. 21 Shares, his office, one office is in New York. So Matthew, you've been in this space for so long, and especially with co-investors and what you guys are doing. Given what you're doing now and what you've been doing for the last decade or so, are you happy where you are? Would you like to evolve into something else? What's the future holding for you, maybe individually and for the organization?
Thanks for asking that. And I'm not doing this, and Alison, who is my co-founder, and the other partners at Blockchain Co-Investors like Mitch and Clark and others, we're not doing this without knowing that we want to do it. We pivoted into blockchain as a full-time area of focus because we think it is one of the most defining and important innovations of our time. And we just spent 30 or 40 years, some of us, helping large companies and industries embrace digital communications and content with the internet. We think that the digitalization of finance and commerce is just as important. Maybe, in fact, we think it's more important, because every industry, every country, every business, every person transacts. And right now, the state of play is that most finance and commerce is slow, difficult. Compliance actually is very hard to monitor and ensure. Risk is out of control. There's a lot of very serious issues and challenges which new technology can help mitigate and resolve. And that was the brilliance of Satoshi Nakamoto, because Satoshi Nakamoto didn't just create Bitcoin. He, she, or they created a whole new approach to the management of value. What does the future look like, Kriyan? I already know that this is going to be going on for the rest of my life. I first got exposed through McKinsey, my first projects at McKinsey a long time ago in the 80s, to the internet. And we're still rolling out the internet. It's 40 plus years later, and we still haven't completed our journey to make information and communication available to 8 billion people in a low cost, easily accessible ways. So we only have about 2/3 of the world online. So we've got a lot of work to do. So when it comes to blockchain and the digitalization of finance and commerce, that's also been going on for 30 or 40 years, but it just got accelerated 10 or 12 years ago by blockchain and the arrival of distributed ledger technology. But I have no reservations in saying that this is a 40, 50-year journey. It's going to be really difficult to turn every financial transaction and every movement of value in every activity that humans do to a new digital platforms. It's not going to be quick and easy. And so, Kriyan, the answer is my future is this is what I'm going to be doing. I've made that choice. I'm all in on blockchain, 100%. It's what I'm going to be doing. And more specifically, what I'm going to be doing and what Blockchain Co-Investors is going to be doing is we're trying to get resources to the best entrepreneurs. By the way, everything that we've talked about today, Kriyan, for the last 35 minutes and 17 seconds, is built on top of a few shoulders, and the shoulders of the computer scientists and the developers that understand these technologies and innovations and know how to work with them. They're very few, they're hard to find, they're deserving of our support, and that's what we're here to do. In our case, we're investors, so we bring capital in a fund-to-fund model, because that's primarily what we do. And then in addition, we bring value added where it makes sense. And Alison is audit committee chair at Kraken and lead director at Bitwise. And I've been helping on and off companies like Securitize and SFOX and Bitwise and others. And that's what we do. It's the rest of my life. I think it's the rest of our lives. And it's one of the most important themes. There are others. So I just want to be clear on that. We don't have a monopoly on importance. I think personalized medicine and transforming the way we care for ourselves, but also our animals and plants, that's one. Clearly, cleaning our environment and ensuring that our planet is healthy and able to support this population and future generations yet to come, that's a second. And then software more broadly defined, because not all software is focused on finance and commerce. I think the continuing upgrading of digital ways of doing things and the improving of the software that drives most of our activities is the third or the fourth. There are others, but those are the ones. And I think blockchain is right alongside those. So the life sciences revolution, the clean and healthy world movement, the digitalization of finance and commerce with blockchain and distributed ledger technology, and the continuing upgrade of all of the world's software. For me, these are the big drivers of the future and the big drivers of investment returns if you're an investor. If you're not involved in some combination of those things that I just mentioned, and you're an investor, then I think you're probably missing the wood for the trees.
I love that. Matthew, unintentionally, we've literally touched on everything I was planning to ask today. And it was such a wonderful, natural conversation. And I'm so glad to have a guest of your caliber. So I really appreciate you making time, not being a native of Hong Kong, just being there for a short time and making time for this podcast. Before we end up today's show, I'd just like to give you the floor if there's anything else you want to plug or anything you want to talk about or any sort of final notes or words. As you mentioned, you have time. I also have time. So the floor is yours. How would you like to end up today's episode?
I'd just say two things, Kriyan, because I agree we covered a lot very quickly. But two quick thoughts. And one's a negative and one's a positive. So I'll go with the negative first, which is if you're listening to this, you're in the audience. And if you come away with an interest in blockchain or distributed ledger technology, but in your head, the so what is, I need to make a lot of money now, and this is a space that I can do it, then I would like you to pause. And I would like you to go back and read Satoshi Nakamoto's white paper and remind yourself that this is about transforming the lives of 8 billion people, giving them access, giving them sound money, giving them the opportunity to participate in value creation opportunities, etc., on a global scale, quickly, cheaply, and easily. And that's why you should be doing this. I think the get rich quick schemes are what give us a bad name in blockchain and crypto, because they lead to boom bust cycles. And I don't want us to do that again. The last 18 months have been quite painful in many ways for many of us. But here's the positive. The positive is, I think this is one of the best uses of your time. And all of us only have a certain amount of time. And as we've been told in the past, in films and in books, all we have to decide is how to use the time that is given us. And this is one of the best uses of your time. If you are a talented entrepreneur, if you are a young emerging computer scientist, if you know how to write code, this is one of the best uses of your time. And you can leverage your own skills and have global impact that will really make the world a better place. So I encourage you, if you're at the beginning of your exploration, to keep on going, because we need more entrepreneurs and we need more talented people in this space. The good news is we have a lot of talent already, but we would just as soon have more. And I encourage you to spend your time on this. I think as Steve Jobs famously said to someone he was trying to recruit as CEO of Apple, who had come from PepsiCo, he basically said, what do you want to do? Do you want to change the world, or do you want to sell sugared water? And I think that's how I would leave this conversation. Do you want to change the world and make value accessible and low and easy for everyone to benefit from? Or do you just want to do something else that maybe has less impact on the human race? Now, I don't mean to diminish the latter, because obviously we need everyone and lots of people add value in their own ways. But I'm talking here specifically to the computer scientists and the software developers. Please put your energy into writing software that can change the world in powerful ways. So that's how I'd finish it up, Kriyan.
Wonderful, Matthew. Before we end up today's episode, of course, Blockchain Co-Investors socials will be there, so people can definitely check those out. Of course, check out the reports that we talked about in today's show, because those are wonderful. I've only read one. I still need to read the rest of them. That is on my to-do list for sure. And Matthew, what about yourself? Would you like people to follow you, or would you just prefer they follow Blockchain Co-Investors? Any sort of socials you'd like to include on today's show?
Everything we do is transparent and accessible. That's the spirit of our industry, and that's the spirit of Blockchain Co-Investors. So on the one hand, you can go to blockchaincoinvestors.com. You'll find tabs called things like Insights, and there's resources for you. We record webinars. We send out newsletters twice a month. We have a page called Essentials, which if you're new to the space, you can just click through that page and you'll learn a lot over a weekend if you have a weekend to spare. So blockchaincoinvestors.com is probably the best place to get started. For the investors who may be listening, obviously we're our professional fund managers. So we would love to talk to investors who want to invest capital, but I can't do that here and now on a public webinar podcast. So again, it's easy to find us, and it all begins at blockchaincoinvestors.com. For me personally, I do try and share my personal perspectives, Kriyan. That's why I was very happy to be here today and speak to your audience. If you think I've got things that resonate with you, by all means follow me, but you're really following our firm, blockchaincoinvestors.com. And we've got a very good team, and a lot of people are working very hard to try and make blockchain accessible to everyone. And so I'd probably, again, just leave it there.
Sounds good. Matthew, thank you so much for your time, making time early in the morning after probably a very busy few days in Hong Kong. I appreciate the sentiment and the breadth of knowledge you brought today. I hope you have a good rest of your time in Hong Kong and a very safe flight back to the US. And I hope we get to catch up soon at some point in the future, talk more about your reports, talk more about what you're doing, talk more about what you're seeing on the VC scene, because there's so much I could just pick your brain for hours. Unfortunately, our
Sure.
audience has like a 30, 45-minute attention span in
Sure.
2024. So hopefully we catch
Sure,
up
sure.
again maybe in a
No
year's
problem
time.
at all. If you get positive feedback from your audience, let's do another one of these.
Oh, definitely. I will definitely share them with you and you can let me know what you think. Thank you again, Matthew.
Thank you.